Good morning, everyone. Welcome to the Euro Trade. I'm your host, Market Stalker D. Let's have a look at what these markets have in store for us this morning. I've got my eyes on copper for a potential long if we can reclaim 590. I am going to be on combines because this is a risk week and things are a little bit insane in the metals markets at the moment. And also we have the rate decision tomorrow. But so far, Asia did a classic establish the low, establish the high, then Eurex starts, wicks above the Asia high, and retraces back to the middle. So we're sitting around flat VWAP at the moment. But yeah, it's got a bit of a long skew for me. If we have a look at the daily chart, that's also middle of the middle on copper. However, we did have this movement from the bottom of the range. So I will be looking for copper to catch up to the rest of the metals, go back to 6 evens, and if we manage to clear 6 evens to even get to 610, and then further into an all-time high, reaching 625. But we'll see how today plays out. If they start to unwind positions ahead of the Fed rate decision on Wednesday. Hold on, we need music, don't we? Here we go, a little bit of music. If they start to unwind the positions to the downside, I would want to see 75 would be an important area. Let me just see whether that's changed. Actually, no. So 580 would be the first one, and then the next one will be 570. So 575 was an important area a few days ago, but it seems to be gone today. So to the downside, basically a retest of these lows where they hedged it. They want to see how they want to play today. Now, I also haven't slept very well last night. For some reason, I couldn't fall asleep until 5 a.m. So I'm running on like barely 3 hours sleep. So we'll see how long my energy can last today. Having a double espresso to keep myself awake. Alright, some initiation here at 590 that needs to hold. Just going to jump through some time frames here and pick charts. Gamma flip level is right here, 590 decision point. Did I take a position on the copper? So I did a bit of scalping on copper last night, just messing around in this combine. I want to get another couple of combines, a couple of XFAs, and I realized, because I was trying to get the 50Ks, and you just can't trade silver on 50Ks, so that didn't work. And I want to get back to 150s, because you do need that extra drawdown in order to make silver work. I thought I could make it work, but maybe when we get nanos, maybe 50Ks would be a good one. However, right now, silver is so volatile. And you can't really desensitize the position more than 1 micro, and that 1 micro is so expensive. It's just not, it's not suitable for what we're trying to do here. And another product that I have my eyes on is the natural gas today. Overnight, Asia was pretty quiet until about 5 a.m. right around the time when I went to bed. So I was watching these couple of levels and I was like, let me see if I can maybe do some positions when I get up, and when we start to get to that pre-market NYMEX. Now I do have a more important area at 350. So 370 and 375, they're interesting, but I never really like taking positions where the options levels are with higher open interest are very close together. I want to have a big difference, or distance, even space, between the first level and the next, because that effectively gives you profit margin, right? You know that if they start to run it up, where's the next area of interest? Well, 4 evens would be one. But outside of that, we do have ADR high at 3,970. What could happen is a time of day effect. So we get to, let's say they run it up sometime in the next 2 hours. I don't like being long for this time of day. And if I am long, I will try to exit around midday my time. At that point, you are in danger of them, and who's them? The wizards. The market makers, dealers, hedging as we get to pre-market, and those hedges can be really violent. So I would prefer to run a short at that point. So time of day is a huge deal across pretty much all the commodities, at least the ones that I'm specialized in, which is energies and metals. So yeah, you get to a certain time of day and they just run it back all the way. So this is why I have a concept of time of day as a level, where you are assuming the move in the opposite direction and then looking for levels and evidence of that in the order flow. But yeah, last night, like I said, since I couldn't sleep, I saw that copper was at a bit of a range, so I was just pinging it in and around these couple of points, and then as they were trying to reclaim the 590, I would try to run a few ticks for a long. Then as they tried to go lower, I was using this. Not ideal, because really on a range day you should be waiting for the outside moves, but I mean it worked, so whatever. I was actually expecting the moves to be bigger, and silver went a bit quiet as well. Like initially it was moving, right? I mean, quiet is a whole different concept in silver. So I never really trade when Tokyo first opens. So this is your Tokyo open, and this is your Tokyo initial balance. Here's the shakeout, right? So here's the shakeout, and then I was just chilling with my husband. We were just watching a show, and I kind of forgot that I was supposed to be watching this. So I never really trade before my 1 a.m. So this is the 1 a.m. candle. This is the pre-Shanghai exchange open. But this was the shakeout. So to the opposite side, the one that I talk about. So again, time of day is a level. You wait for a stop run in the opposite direction. And this one can give you an assumption of what they're going to do, right? It's like, well, they wicked it to the downside, but what happened? They reclaimed the nearest level of 106. I was banging on about 106 yesterday, how it was an important level. Now, as it turned out, they almost went to 100 here, stopped just under 102, and I mean, $2 in silver is absolutely nothing these days, or at least in the last couple of weeks or so. Then they established the Asia low immediately at Globex open. Did the wick in the opposite direction. And then this would have been what I was supposed to be doing. So, you know, at 1 a.m., you look at the opposite move to the shakeout, and then they ran it up. But I missed that, right? So I missed it. Then I was messing around with copper, and my final trade was after 3 a.m. So here it is. We had the ADR high there, which we've gone above now. So again, 110, important level. I was talking about that yesterday. 110, 106, those were like sort of my orientation points for the day. And then 115 to the crazy opposite upside extended move. Yeah, so once 3 a.m. came in, I was looking at it and I'm like, they're not doing much. And I also saw something interesting, and this is probably when they briefly shut down the exchange. So I'm just going to see which tick chart that was. Here it is. So if I make this bigger, and you can't really see this properly on the price-based charts. It has to be tick-based. So this is where it briefly stopped for a few minutes. I think it was like 10 minutes. They halted the trading, I think. So look at how even this is. So I was watching this and I was like, what is going on? But I was already short because I was hypothesizing the ADR high reversal after 3 a.m. So if you're gonna have a day where silver does reverse yet again during Asia, that usually happens after my 3 a.m. I'm GMT, I'm in England. And then they just ran it all the way back down. And here we are, past the ADR, looking like another outlier day. 110 remains an orientation point. Not that surprising. But you now also have this Asia high. So the Asia high I establish between my midnight and my 6 a.m. You can use a time zone converter from GMT to wherever you are in the world to figure out what time of day that is for you. But that is how I do my highs and lows for Asia. I don't take Eurex open. This is just like no man's land, and frequently brings. So here's the pattern. If you were to put this in a flowchart, I'm not going to do that. It's way too early and I haven't slept. But if you put it in a flowchart, shakeout half an hour before Shanghai or within the first sort of 30 to 90 minutes of Tokyo Open. So shakeout, sweep in the opposite direction. That gives you an assumption that if they swept it the other way, then failed, you will see a move in the opposite direction. Once that's done, you have two options. It either ends up in a mad trend that doesn't look back, or more regularly, it will establish a high or a low for the Asia session in between 2 a.m. and 3 a.m. GMT. After that, you have a move that's pretty directional. And then yet again, you have the Tokyo take profit move, which can start anytime from my 5 a.m. until about post 6 a.m. for about 90 minutes. That's the signal. So I work in 90-minute chunks. And that sort of gives me a roadmap. Are they doing this or are they doing that? And it just keeps me on the right side of things on most days. And I don't like scalping. I like more extended moves, but when something gets stuck in a range like copper, I have no other option, right? We establish the high, establish the low, didn't really initiate anywhere. So I was just kind of taking smaller moves until silver gave me the 3 a.m. reversal. And then it was a smoother trade there. Here. But yeah, I felt really exhausted by then, and I'm like, I can't. So I decided to give this combine a bit of love. Giving it some love. How cold is it in London? Not very cold. Like, we're moderate climate here. We usually have some colder days towards the end of December, but even that, like even around Christmas and New Year's, it wasn't even that cold. We didn't even get proper snow. Not that we get proper snow here anyways. It sort of just settles a little bit and then it's gone by midday. The times when London has like snow, they're like outlier years where it's extraordinarily cold, and you get some snow that lasts for maybe a week, maybe a couple of weeks, but it's not really a snow kind of area. If you want snow, go to Scotland. They have snow up there. Scotland is beautiful. We went there. Oh yeah, so this is something I was doing while I was waiting. I've realized that the GEX levels do work, but because of the extraordinary volatility that we're seeing, even though it actually fell, very important point, last night I was doing some data crunching, and the implied volatility was about 78 yesterday, I think. Yeah, 78. And then throughout that whole up move and the down move, implied volatility fell, so it contracted. However bizarre it seems, they were expecting that. And because of the implied volatility falling, it means that it wasn't a panic sell. It was a healthy pullback. So if you want to see what a healthy pullback looks like in silver right now, here it is. Hey presto, healthy pullback. It looks bonkers, right? But that is the kind of times we live in. Healthy pullback, contraction of IV, and now an orderly continuation. I mean, it's very hard to believe. So yeah, London not that cold. Scotland is the one where you go for cold weather and beautiful snow. Over here, just wet. Very, very wet. We've had some disgusting rain. I literally had to bathe 4 of the dogs because my husband takes the other 4 every single walk, and we take them 5 times a week. And then the younger pups and their mom have, I mean, they're not pups anymore. Then they have another doggy daycare a couple of times a week, and they get muddy. But the daycare washes them down before they take them back, so that's nice. However, for all the other days, it's mud everywhere. Yesterday I was doing some laundry, and my dog walking bag, which was in one of my videos like a couple of years ago, where I took them to a secure field, and I have it with me. So it's like this little bag that's called Cocoa Pop. It's a great little company, and all of my stuff just fits in there. So it was completely muddy, and where we are now, it's more clay, so it's clean mud. You know, it's not disgusting or anything, but it just stains everything. It's hilarious. So I had to like wash it. It was full of mud because my pups like to jump up, because they're spaniels. They're half spaniel, half cavalier, half Pomeranian, and some of them came out massive. So we have 2 of them that are like almost 30 pounds. It's 13, 14 kilos. Lean as well. They look more like small Labradors than what they are. And then the rest of them are whatever. They're like medium to small. And there they are. Yeah. Now, what I've realized is because of this huge volatility that we have, which is sitting at 73% at the moment, it actually overshoots GEX levels by an average of 367 ticks. Sometimes it will be less, 250. Sometimes it will be more, like 500. But if I don't see anything, of note in the GEX levels, I will consider that an overshoot, right? Like yesterday, this one, I did not have a level before 120. So the only reference dealer level was 115. This is how I look at it. How much do we overshoot it by? This one was a big one. This is why this average is big. Most of them were about 250. And then this one right before COMEX close, which is why you're not supposed to be going long breakouts into COMEX close, because it starts doing this, and then they use that as an excuse to just run it all the way down. So COMEX close, very cute. I ran a copper short whilst I was on group coaching that followed this, but I took the move down to VWAP, not in silver but in copper, but it pretty much looked the same, just less crazy. And it continued. But it's an unusual thing, especially to see copper moving that much in that time of day. So usually after COMEX close, everything goes a bit quiet. Didn't go quiet yesterday. Did not go quiet. Benjamin says, based on the gamma levels, do you kind of have an idea of how price may play out for the day? That is more a matter of whether we're in positive or negative gamma, and then also some of the other things that I look at. For example, on silver, if I have the Asia high and Asia low, and we start hanging above Asia high, we are also now in positive stabilizing gamma, so I would expect more mean reverting moves. But mean reversions on silver look like this, okay? This was also a positive gamma. All of this, right? So they were using the level. So yes, I do, but I try not to predict. So I try to stay objective, and I try to just read how the price is behaving around my potential reaction zones that I know the dealers are looking at as well. So I use dealers as my edge, and whatever they do, I want to try and do as well. And sometimes I will misread it, but most days I can read it pretty well, you know. I also use the concept of supply and demand on larger time frames, if there are any. I don't think we have any. Yeah, I mean, this is just madness. Maybe a 4-hour chart. Yeah, so 4-hour chart, we had supply that was created from this smash and a continuation. Now we're ignoring the market shift points, which are, I call the conterminus line. So at one point, this chart looked like an equilibrium. So two candles that were going up, and then one of them started coming down, and then the third one ran it down. So what was that? It's a market shift point. When the price retests the market shift point, the conterminus line, it should really have a reaction. And you can see that little reaction here. But it wasn't super sustained. It kind of sustained a little bit, and then they decided to run it back up. Now we're ignoring the market shift. That's bullish. And then another point, we're hanging above the Asia high. So we're trying to break outside of the Asia range. That's also bullish. But where is the stopping point? Potentially, a mean reversion should happen in and around 115, but margin of error of 367 ticks. Now, some products like copper, they look at how they reacted from the coal wall at 587. Not much smash through it, right? So when below it by about 10 ticks. So that's usually how things look when we're in less crazy territory. And then let's have a look at another example. So here's 590 reacting. So 590 has been here for like forever. It's been here for like 2.5 weeks now. Maybe even longer. But, you know, from memory, I think it's been here for like at least a couple of weeks. How much did it break it by before reclaiming? 23 ticks. That's also very normal. So if you're using currently I'm using a 45 tick stop on copper. That's a bit of a drawdown, but, you know, nothing major. And then also it matters how we are arriving at the level, and whether we are, let me see if I can find a good example here? Yeah, okay, so let's have a look at this one. It's kind of like the old support turns to resistance, resistance turns into support concept, but make it GEX levels, right? So if you have, let's say that we had a call wall at 86.50, just for the explanation and class purposes. So you had a reference level somewhere around here. They don't touch it. They actually hedge just before we get to it. But eventually they run it through. So what happens now? Well, now you have this reaction zone. And I look at it as a zone. I don't look at it as a single price point. Because you just don't have the accuracy when you're trading with any sort of size. So you have to look at it with slippage, margin of error, and you can't nitpick. So once we went above it, what do we expect to happen as we get back to the level of interest? Well, we would expect the long hedge to happen, okay? So we were hedging shorts. Why? Because they were coming at the level from underneath. But once we've broken it, that changes the story. So now that level, if they come back to it and the move through it is significant enough to go, yeah, we trended above that. Now you have a possibility of that level being a bounce point. And all you need to do at that point is just to watch how price action behaves around it and stay super objective. Toughest thing in this line of work, being objective. And similar to what we have with 590 today. So whilst this was happening, 590 was a potential support. When we broke through it, so here is the break, we tried to reclaim it, but ran out of steam, did not make a higher high compared to the previous candle. That became an opportunity to fade this at VWAP for yet another round lower. That happened. So now we trended below it. Coming up to the time of day when it's dangerous to go against very nearby levels, because, you know, usually I want to see 2 levels away from where I am for my targets. Not just one, maybe one if we have a situation like in natural gas where the distance is really far, but generally I will go from second level from whatever the options chain is telling me. So today we have 90 and then we have 95. So how does this change? Well, first of all, time of day. So you had 587, there was clearly a reaction zone. So as you're assaulting it to the downside from 590, 587 becomes what? Potential support. So they can overshoot it, but they're probably going to reclaim it. Why? Because we fell really hard and quite a ways away, which plays a part in me deciding whether I'm going to run a mean reversion idea or not. But what's going to happen with 590? Well, it's too close now. So now you have the 2 options. It either starts pinging between the 2, but because of the time of day, you expect I expect a take profit Tokyo move, which tends to be a little bit more fierce. So we look to the next level. So this level here was Asia high, because that was the next point of reference. Price discovery happens during the Asia session in metals a lot. So they have to be on the chart as well. But once 590 was solidly reclaimed, this is still a range for me, right? But let's say that we go all the way up to 595. And then we come back down to 590. 590 becomes support. Does that make sense? So whilst you're below it, 590 can become a further continuation down to the next level, or maybe a range. Once we're firmly above it, it becomes another orientation support level. Am I making any sense? Because I haven't slept, so I have no idea whether I'm making any sense. Mr. Crazy Tone says, I love trading gold lately. You know what? I'm going to be trading gold once it rolls into, I think it's going to be April. Looking at the CME and volumes. But yeah, so I've got a gold blazer. Gold metallic blazer on the way. You know I mean business when that's happening. These buying blazers. Sandy says, we had snow, temperatures down to -12 centigrade, but all of that snow melted and now we have 3 to 10 degrees. Yeah, same here. We're sitting at about 10 degrees Celsius. Dipping into like 11 and stuff. It's just, it's wet. It's so wet. It's disgusting. I luckily am very well equipped for London weather. I have these kind of water resistant trousers. Like, you can't go swimming in them. It's not a wetsuit. But, you know, if you're out in the rain, even heavy rain, you're not going to get soaked. I have a raincoat. I have a tweed coat. And rubber boots. A couple of those. Plus also kind of snow boots, because they're just comfy and nice. So I basically look homeless when I'm dog walking. And it's also because we have a secure dog field, so nobody sees me unless I decide to like create some vlogging videos. But you can't really do that. The dogs bark because it's all 8 of them, and then my husband's there. He doesn't like the camera. He's a very private person, and then it gets a little bit difficult. But I don't know, maybe I'll do some vlogging. Let's have a look. Oh, God. What is the Tokyo? What's the time for Tokyo? In EST, I think you are, Joe. So EST, let me use my time zone converter. Tokyo. Tokyo start is 7 p.m. But be mindful that might change throughout the year because we do have the daylight savings. I don't know whether Tokyo respects daylight savings. I can't remember. No, so they do not observe daylight savings, which means you have to make sure that, again, you use a time zone converter for the times of the year when we are exercising, observing daylight savings. And UK still does it. Parts of the US still do it. Turkey has abolished it, I think. Yeah, and then the Tokyo close is at 1 a.m. Eastern. Right now. Okay, so yeah. I use this time zone converter to, because obviously I work with people from around the world, people from around the US, people from Europe, Australia, you know, all over the place, and I just can't keep up with. I even had somebody from Singapore who was in my gold coaching. But yeah, it's a very useful little thing. It's called timeanddate.com. So you just put in the cities that you're looking for, and it gives you exactly the time currently. So very good for those of us who work across multiple time zones. Okay. Sorry, I'm just catching up on my emails here. Riveting TV. And just stare into the sunset. Alright, intraday volatility is just insane on silver, roller coaster like, and not used to trade in these conditions. So Kareem, don't trade it. Find something else. Go to gold. Gold has gone much less insane. Much less insane. It was insane for a long time. And whilst it was doing, like, it still has an expanded range, the price action intraday is not that unmanageable for some reason. it just doesn't wick around. I feel like silver has become the new NQ now. Like I was talking about it when I could still trade it on a 35 tick stop very comfortably, right? Now, we're actually heading into territory with silver. For me, the way I scale my stops, I would have to use a 220 tick stop to be sort of like comfortable in a position. So I wish that we could desensitize the position even more, but you can't go lower than 1 micro. And what is 1 micro? For 220 tick stop, you'll be risking 1,100 bucks. So if you have a balance of about at least 30-40 grand in your XFA, maybe 50, just to be safe. 50 grand would be safer, but still not safe. Maybe you can engage in trading silver. If you only have like 2, 3, 5, 10, 12, 15, even 20 grand, just don't trade silver, man. It's not the product for you right now until you build up that big balance. But yeah, in order for me to stay comfortable in a position, which is my primary concern, I'm not really interested in anything else apart from me staying emotionally regulated and not freaking out whilst I'm in a position. So breathing. The appropriate size stops that I have a formula for have to be in place. But the problem is, if you have a low balance and you're trying to trade silver, first of all, your risk of ruin is sky high. It means that if you go on tilt, that account is gone, man. Like in a blink of an eye. In a blink of an eye. So you have to be super careful. So my whole approach is to first use copper and times of day when I have probabilities, like when I'm running up the balance, to not trade super crazy instruments whilst I'm trying to build up the balance. Then once I have about 12, 13k in there, maybe I will pop in a silver trade if we can get it on a maximum of 120 ticks. But once it goes to 200, 300 ticks to basically desensitize the position to intraday movement and not just get whipped out in a blink of an eye just from crazy price action, that is my cue to park that product on the shelf until the implied volatility comes down again. So until basically its own VIX stops being bonkers. So that's kind of my overall approach. But gold, even though it's still moving, it's been much calmer. Right now it's in rollover as well. So even though it has a lot of movement, okay, so this day was a bit crazy, but let's just have a look at the candles that preceded it. Like these candles here, okay, 100 ticks here and there, but then I was looking at this, and then I was also looking at a 5-minute chart. Let's find that. And 5-minute time frame. So let's say you're looking at this reversal, you have some sort of a reference, and I had a reference at 90 here. You could have easily done, you know, a trade on about 60 ticks. Without like drama. And then let's have a look at today. Let's look at 3 a.m. today. So look at what the ATR was here. Alright, so they ran it up 120 ticks of ATR on a 5-minute time frame. So that's a lot. But once that's settled, so 3 a.m. this is that top that happens between 2 and 3 a.m. my time. Once that's settled, the ATR quickly came down to 60 ticks. So, you know, it's still elevated, but just look at the price action. It's much smoother, and it will be because it's high volatility but rollover. So that kind of cancels each other out. You will still get a pretty decent move across the entire 24 hours. That goes shoulder to shoulder with silver volatility, but it's not going to be crazy intra-candle. And you can maybe use that to your advantage now. Less volatility because of rollover, but still a lot of ticks to be had. Or trade copper. Copper is on the other extreme, where when it's doing its like slow movement, it's very controlled. Takes forever to make up its mind. It can move, obviously, but again, this move that I took, this was the one that I took when I was on group coaching last night. It was very smooth. Like silver did the same thing, but it was like a very dramatic. It was like up, down, up, down, up, down, down, and then it just all rolled over. And all the while, copper was just, we went over 6. We went down from the ADR high again twice. We dropped through the call wall, and then we reached VWAP. Like there was nothing of this like reflexive bounces to the opposite side that is the thing that will mess with your emotions and will put you on tilt. Because there's a cognitive dissonance between what you're expecting, as in like your position being open and you're expecting, let's say, longs, but suddenly the price action doesn't do that and it does something completely the opposite. So it causes a cognitive dissonance in your brain, and that's uncomfortable. That means you're not safe, and the body just goes fight or flight. We have a saber-toothed tiger to fight, and the saber-toothed tiger is called silver. So that's why you get tilt, because you're expecting one thing, something else happens, and then everything just goes down the pan. The shooting star is supposed to give a bearish outlook. No, so the shooting star is basically a hammer candle. Joe, if you watch the lecture on the price action patterns advanced reading, there will be a bit of data there that says that intraday hammer patterns have a high failure rate and that I really dislike them. But also I found that there are more pivotal pops from dealer hedging that never really holds. Maybe if you can pair it up with some sort of an idea of why a fundamental macro picture might change, you can then use it as a reversal. But a shooting star is not a reversal, neither is a bullish hammer. They get taken. I talk about that. It's especially the lonely candles. So what do I mean by lonely? Let's have a look at, oops. Let's have a look at the daily here. What do I mean by lonely candle? So a hammer can absolutely be reactive if it's a part of a consolidation. So there was one candle here and another one here. So, you know, for example, you had, let's say that this one ran up. Oh, God, yeah, I can't really draw. Let me see if I can grab another one. You know what? Let's go to big silver because I won't have too many things on there. Is clean, so I can illustrate what I mean. So single, lonely, hammer candles, and shooting stars are pivotal pops into something else that never holds. This is a prime example of that. Okay. So what do I mean by it being a part of a consolidation, increasing the value as a reversal signal? So let's have a look at it. Let's say that we ran up from here. So instead of the prices going, you can't draw on this, that's so annoying. Let me see if I can maybe get like lucid chart up or something where I can draw. Okay. Okay, so let's put this in here. Shapes. Let's go for shapes. So if you have, don't want that, I just want a regular shape, not a flow chart. Okay, maybe I can make this work. I don't want it flowchart. I literally just want like rectangles, those like mind maps. But this is not. You know what? I can make it work. Maybe. Can I make it work? Don't want text. I'll make this smaller. Okay, so let's just imagine this is a candle, right? Ignore this. This is just some diagrams that I'm randomly working on. So then you get a run up, and then you get a candle that has a very large wick. So we're just going to use an arrow. Pretend that's a wick. And then you maybe have another, let's say, bearish candle. This would be a composition, so let's just change these colors as well. So let's do up, and then let's do red. Let's do another red. No, actually this is a green. And then let's do another red. So ignore the text. Can't remember how to take it off. But this would be a, reverse hammer in a consolidation pattern, right? That is a valid reversal potentially. When you see just this, it's a valid reversal. What do we have on silver? We have this. Even worse, right? This is red. And then went all the way down. It's a huge wick. This is a candle that has a high failure rate. Why? Because it's a single lonely candle. It has nothing as a consolidation. It was just a quick pivot pull up and then a throw up. Those have high failure rates. Okay, so I don't use those for figuring out the supplies because they're not true supplies. They're just very, very quick reaction moves. Then don't really hold. Like the hammer candles, when they look like this, alone and lonely candle. Billy No Mates candle, as I like to call them. They are not reversals. They are something to trade against them into the wick. Because this is excess, and I know that Dalton talks about excess, but I found that how the excess is made, and like, I don't like excess, let's just put it that way. Because the failed auctions, even on the 30-minute time frame, that start with excess usually don't hold, or they're beginnings of consolidations that probe into that wick of the excess TPO, single print. But statistically, I found that Billy No Mates candles, hammers, shooting stars, long-legged dojis, all of that, high failure rate for reversals. So Joe, I would say that the pattern was very much respected. High failure rate. Again, I created that lecture years ago. It wasn't like new. It's one of the ones that I didn't update in 2020. So the content from that lecture was, I think, still from like 2019. Nothing unusual. Kareem says CFTC open interest shows a major divergence on silver futures. RSI overheated mode, could be a reversal coming. Don't look at RSI for this. This is a bullish market. There is no such RSI. The amount of money that people have lost in equities when it was on a bull run, it kept going overbought, 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 overbought. All-time high, all-time high, all-time high. CFTC report is also 2 weeks late, so I've never really figured out how that would be useful for intraday. And the adjustment that you're seeing is from 2 weeks ago. So probably when this accumulation was happening in December. And that's now coming out as the report. We're way past that. Or maybe here. So when we were consolidating, some people got rid of the positions. But now we're much higher. Maybe if you're a swing trader, somebody who like spreads trade or the spreads, or you know, you maybe do credit spreads or something, then you hold them until expiry for weeks. Yeah, that could be a useful piece of information. But intraday, I've literally never found a way how you could use that. Because you can't. Because we're working with real-time events that are changing intraday. We're not waiting for the report from 2 weeks ago, how the open interest was positioned. What Hogue does, he tracks open interest on a day-to-day basis in a CSV sheet, like in an Excel spreadsheet. That would show more change. In my eyes, over how the open interest is doing as a whole. But I use the options open interests, and I also use the implied volatility by strike on top of the general implied volatility that we have on the day. So to me, that's very, very helpful. Savage Sand says, hey D, which session value area range do you usually look at for GC, HG, and silver? That will depend on which session I'm trading. So I look at 3 individual sessions. There is the Tokyo session. Well, Tokyo session with a heavy skew to Shanghai hours. So while I do start tracking it, I do not trade before Shanghai is open. So if you look on my charts, let's go to intraday. So here is the COMEX value, all the way up till 9. This is my hours. So COMEX is roughly 120, 130 until 9 p.m. my time. I look at the entirety of the afternoon session in my time zone, from COMEX beginning all the way to the end of electronic trading. Why? Because things like these happen. So if we were to cut this off at the puristic COMEX close settlement time, then you would miss out on where the distribution curve was made when this was happening. So I prefer to run my value areas and all of that good stuff for COMEX as an extended electronic hours. Now London is different. London I do shortened hours because I run it up to the COMEX open. And then I use that when I'm trading during London, if I'm trading. But as you can see, very, very quiet day most of the time. We're range bound, and this is normal. It's kind of like the out of hours market for the metals. And then you have the livening up. Here it is. The volume starts increasing as the COMEX pre-market starts happening. And then in copper, that will be a little more pronounced, I think. Primarily because of LME. So look at yesterday. Let's just do these volume profiles by session. So 8 o'clock That's London start. This one is overlapping because that's wrong. It's 1:30. Okay, so London, pretty quiet, pretty quiet, pretty quiet. We get to 11 o'clock and suddenly volume kicks up. What is this? This is the LME. Why is the London Metal Exchange important? It's because they trade base metals. They no longer trade precious metals. They used to until 2022 and then they stopped. So now it's just zinc, aluminium, tin, I don't know whether that's the same, copper. Do they trade anything else? I think that's all the base metals. May have missed something. And then as that starts happening, it has a little bit of a knock-on effect on the precious metals. So they start sort of livening up as well. But London, for all intents and purposes, are out of hours. These sessions were supposed to be DAX sessions, not metals, but hey, that's a different problem. And then you have the Tokyo session. So Tokyo session, again, let's do a marker. Pretty lively. From, not from Globex, but from midnight. This is midnight. And then all the way up until 6 a.m. I do not extend the hours because this is now a take profit move for the Tokyo session. And effectively Eurex. Eurex starts trading at 7 o'clock. And literally they start to cause some shenanigans and whatever. And then you have the dead hours, which is London. And then you have LME, followed by COMEX, which has by far the most volume. But if you look at how the volume starts kicking up, it's already from 11:30. Why? Because LME starts trading at 11:40, so naturally they start to run it up. Another thing that I like to do is to anchor a VWAP at the start of LME, and then I look at how we're behaving. At some point this show is going to move closer to the LME open, so right now I'm finishing the stream at my 11 o'clock, so at some point we're working on moving it to 11 o'clock so that we can cover the LME open and that pre-market COMEX time. Don't know when it's happening, don't ask me. We've had some changes in the background and I need to touch base with some new people. But yeah, so 3 sessions depending on whichever session you are dealing with, and then looking to see how the market is actually relating to the value area from the previous day, not the previous session on the day. Very huge distinction. So we're comparing Tokyo to Tokyo, London to London, and COMEX to COMEX. We're not mixing and matching, going, well, Tokyo was an inside value and now London is opening outside of Tokyo. No, 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 no. That's the wrong way to look at values. Values are session specific, okay? For intraday purposes. Just going to clear my throat. Yeah, this is the lack of sleep, guys. Croaky throat. How do I use the fixed range volume profile? I used it first and foremost just like I used the market profile TPO to look at the previous day's session. So, you know, if I'm in London now, I look at where the value area was yesterday. But when it comes to situational awareness on the day, I actually prefer to use TPO profile, but we don't have it yet, so we're just using this one. So if I drag current day's profile, now this is still developing, and this is subject to change. Now that's a good thing and a bad thing. So the way I like to look at it, are we building value to the upside? Are we changing value with the movement we're seeing? Is the value migrating slightly higher? Are we maybe coming back into the value and building structure, which you can see more readily on the TPOs rather than value profile, volume value profile? Right now we're still sitting slightly above the value area. So as long as that is the case, I would try to, if I was in a long, for example, I would try to stay in. If we start to migrate the value higher, and then we start building TPOs sideways, TPOs are profile specific. So I'm going to show you just the TPOs. So here's the TPOs, right? These weird letters are what's on here. And I'm looking forward to the day when we do have TPOs in Topstep X, but that day has not come yet, so I'm working on it. Right. If we start to accept and spend time in this value, developing value, I may consider a short, you know, just to go, okay, well, we failed to go higher. There's no initiation above this area. We're now spending time here. So maybe there's a chance that we go to the value low, which is a developing value. So again, subject to change. It will shift throughout the day. Sometimes it doesn't shift. That also gives information. But I don't really focus too much on that. It's kind of like an overview that I keep on the chart on a 30-minute time frame. And if I see something relating to the hypo, like let's say we are coming away from the ADR high and we ran it up, and now we're sitting above value, developing value, but we're starting to spend time inside it. So that would mean that my ADR high reversal short has more legs. Why? Because we failed to bring the value even higher and the price started accepting it on the day. It doesn't have the same rules as the special value acceptance to special situation play when you're accepting value from the previous day, because that's a stronger setup, stronger playbook. But it's still useful, you know. I just think that for most people that would be a bit of an overkill. Maybe not. Maybe it opens your eyes to something, but I always anchor it to the start. And somebody in chat yesterday during group coaching asked, when are you going to start doing session volume profile? Well, the session anchored volume profile. You have it already. Here it is. Like, where are you looking, man? Yeah, so anchor it to the start of the session, whichever session you're looking at, and then track how the price is behaving in relation to extensions of value. Like the way I like to use it, I like to have the value area all the same color. I think default, it has value area up and down as different colors. I don't like that, because I'm like, I don't know what's going on. Like up volume, down volume, okay, no problem. But I just want to see the value area in one color, just a singular color that tells me that we are either inside value or outside of it. So that's how I use it. I don't know whether it's useful to you in any way, but anything to help, right? How do you look between Tokyo and Shanghai? They're kind of overlapping. Not really. I look at Tokyo to fake out whatever Shanghai is going to do. Kind of like the post-NY cut, Joe. You know what I'm talking about. And kind of like the day range fill. So you're looking for a fake move to happen first. And then for Shanghai, and that can happen during the first hour of Tokyo, so initial balance, or half an hour before Shanghai, because Shanghai starts officially trading 90 minutes after Tokyo opens. However, from that end of the initial balance, you can sometimes have the wick in the opposite direction. So you're looking for sweep. If you've watched the bookmap lecture, you're looking for sweep in the opposite direction. And then you are just looking for the market to carry on the other way. We had that in silver. So here it is. This red box is your initial balance, Tokyo. What happened? So look at the wick here. So they wicked it down, didn't break any levels here. Wicked it down, reclaimed 106, which was an important price point. But it was a wick, sweep down, reclaim. Then this is pre-Shanghai, smash. And then Shanghai does very little, but then also reverses at 3 a.m. my time. and then you get the VWAP. You get the mean reversion to VWAP before VWAP brings further upside into ADR high, so you could end it there. But yeah, kind of like post and white cut. Same thing, just slightly different times of day. I should probably update the Asia lecture, actually, because I created that many years ago, and we have some very, very different things happening. Not like drastically different, you can still have the momentum, Asian momentum, but again, not without the sweep, especially in metal markets. Sarah-san, to clarify, statistically, how much does the previous day COMEX value area levels matter when trading the Asian session? Not much. So you want to be focusing on... The reason why sometimes... I know why you're asking that, San, because sometimes I reference the COMEX values during London. It's because London is the out-of-hours session. So look at it. It's, even if you look at silver, it's just, you know, watching paint dry over here. Like, volatile silver. Volatile? You know, this is the out of hours time for metals, no doubt. This is why I will talk about the COMEX value during the stream, because I'm trying to give people value for the rest of the day, right? And I'm like, well, this is where the value was for COMEX, but I'm not going to be using London value for anything because it's an out of hours market. However, if you have a very lively Asian session, which we have had for months now, you need to look at Tokyo specific value area. So not from right now, so, but you know, for last night we were looking at, of course that was on a different chart. These are just some measured moves that I was making on that day. Right, here we go, till 6 a.m. So, delete London, delete COMEX. So, when Tokyo opened, here it is, red box. Where do we open? We opened inside value, right? Why? Because let's put the markers down. Here is, and on my other platform, I actually have this so that we coded it up. So that the extended value high and value low are actually printed as a level, just a line on the chart. So we open inside value on the nose of value low. What does that bring us? It brings us the possibility of a neutral day type immediately, like some sort of a range, change in sentiment. We're no longer opening above value and above value and above value. So it could be a change in sentiment, but it could also be a range bound day. So what did we do? We wick down, bring it back, extend the move, go outside of value, but then there is a thing called the responsive activity fade. And that means on an inside day, when we're opening inside value, if the market makers take it outside of the value, we're actually looking to fade it back to value. So what happens? We hit ADR high, don't manage to go any higher, and we just roll over to VWAP. So that will be an auction fade D style. Then you return to the initial balance, and now you're in territory where London is starting to trade, but you still have the possibility of that Tokyo close, yet another reversal, like a day range fill type, but for Asia sessions. So you have Shanghai pre-market, which is post NY cut equivalent, and then you have the Tokyo close, which is day range fill equivalent for the New York hours. Does that make sense? This is all like concepts from my methodology, and Joe is one of my gold members, so that's why I'm going a little bit deeper into it. All right, so we've got some time. Kaiser engineer D, how do I overcome revenge trading? I can pass combines to get funded accounts, but after making profit for a few days, I blow my account. Size down, lock your wrist settings, and when you feel angry, go and lift some weights if you can. So this thing, personal data loss limit, blah blah blah, liquidate and block. Symbol blocks, block the big symbols if you're in a 50k. If you're not in a 50k, if you're 150k, you don't have to do the symbol block, but definitely do the symbol limit. Once you've done that, click this little button here that says lock risk settings for the day. Do that every single day before you start trading. Because on days when you have emotional dysregulation due to the market doing something else that you didn't expect, so you're expecting longs, it goes short. Like I said, it causes somewhat of a cognitive dissonance in your brain, and there's a conflict of what should happen versus what's happening. That kicks up your fight or flight response. It's not really revenge trading, it's fight or flight. You want to fight the market. That doesn't work. How do you beat the fight or flight out of you? Not easily. The first step would be to use lock risk settings for the day. So before you do any trading, what do? You lock risk settings for the day. I think at some point they're going to make this into a weekly, so you won't need to do that every day. But for now, you have to make it into your routine. Lock risk settings for the day. That's going to save you. Second step is to, if you can, do weightlifting. I am very sad I can't do weightlifting anymore because of my health problems. But it was the best thing ever for calmness, engaging your prefrontal cortex, and not trading from an emotional standpoint. Why does weightlifting work? It's not because it can make you look buff and sexy and whatever. No, it's because on a biological level, when you're kicking up adrenaline, revenge, frustration, anger, all of that comes from your primal brain. Fight or flight. What is the fuel for the fight or flight response? It's the glycogen reserves in your muscles. They're not sitting there in your brain going, yeah, let's kick up fight or flight. No, they're in your muscles, right? Because you need your muscles when you're about to fight someone, right? So by doing weights, it's the fastest way, and challenging weights as well. So the way I explained it to people when I was still a bodybuilding freak, is to try and do 10 reps, and the last 2 reps have to be very difficult, nearly impossible. None of this like take 2 kilos of weights and then do 1 million of them. No, forget about that. That's going to take forever. We're not hippies. We've got things to do, right? So we need to find the most efficient way of getting rid of the glycogen reserves in the shortest amount of time. If you can do HIIT, that's great, but I found that older I got, because now I'm mid-40s, I just couldn't do HIIT anymore. Even when I was 37, it was very difficult. Your cortisol levels are already elevated from a whole bunch of modern life and stress and work and everything. The last thing you need is to elevate your cortisol levels even further when you're past 35 and you're trying to maximize time. So I generally don't like cardio. I've never been a huge fan of it. And if I have to do cardio, I would just do like low impact cardio. It's so bad. But weights, I used to love it because you can really like smash the glycogen out of your muscle reserves, and then you feel your rational brain coming back. And in fact, whenever my traders are dealing with revenge trading, frustration, annoyance, I will say get those free weights that you have around your house always, or some kind of barbell. I have a barbell in the house somewhere from the time when I could exercise. And if I felt like something is kicking up in like emotions wise because of trading, I would literally just stop trading, turn around, do some deadlifts, or clean and jerk. That's like a compound exercise that works out all of your muscles at the same time. So it's not because I'm like, I want to look hot and be like the She-Hulk. No, it's because I don't want to shuffle fight or flight responses into my P&L. I want to shuffle them into where they should be, into a fight or flight response, so either fight or run, both of which require glycogen reserves. So you drain those, and it's the most bizarre sensation when you get to the point where your glycogen reserves are low enough. Your rational brain comes back, and you see all the nonsense that you tried to do just a minute ago. It's beautiful. So yeah. Justin says you look absolutely amazing for being in your 40s. Thank you, Justin. I've always looked younger. My sister in the chat there, Sandy, she's actually 55, and she looks mid-30s. We look a little alike, a little bit alike, but yeah, it's crazy. However, I will say the lights do shave off about 10 years. I look mid-30s when you meet me IRL, to be down with the cool kids. But yes, Granny D over here in mid-40s. Luckily I haven't blown up like in weight or anything, so I think that helps. It really helps staying small. And I'm a very small woman as well. I'm borderline midget. Not supposed to say midget. Little people, borderline little person. Not quite. I'm 5'1". I'm 5'1" on a good day. But I'm very small, very skinny, and you know, I've taken care of my face over the years because I was in the entertainment industry for a long time, and I continue to do so. I have very good skincare, and I'm not shy to admit that yes, I've done Botox. That's like a normal thing. Just to make sure that the wrinkles don't go too deep. But at the same time, I'm not obsessive about it. I'm not like, you know, freezing my face to the point of no movement. I just do it enough to dampen some of the overactive muscles in the face that can cause a deep wrinkle. So I just keep an eye on things, and as I start to see facial changes that start either looking different or deflating, I go and deal with that in very, very small amounts. So I've been doing that since I was 29, and I pretty much stay looking as if I'm 29 to 35. Depends on how much I've slept. You know, I'm at an age where not sleeping like today, if you met me in real life, my eye wrinkles start coming up. But yeah, so you know, try to eat well. I can't really say that I've led a very super healthy life, but I did do bodybuilding, so I was a fitness freak for a long time. And that came with, you know, strict meals and nutrition, discipline on all accounts, which is something that is intriguing to me, not because of, you know, the outcome of how you look, but purely because of how much effort and discipline it requires you to just kind of stick to the routine. And then once you get over the hump, and it's very similar to trading in that regard, once you know what all of your meals are looking like, once you know the time of day when you're doing exercise, once you have structure, that spills over to the other sides of other parts of your life, and it's kind of easier to deal with things that just have to be done. I don't know how to explain it differently. So for example, daily loss limit, sticking to a default max position size, let's say 3 micros. Non-negotiables. So that would be something that just has to be done in trading. Just like you have to only eat a certain amount of calories to achieve a goal, right? You can't overeat. You can't behave as if every day is your cheat meal when you're trying to sign up for a bodybuilding competition or 12 like me in a year. And you just can't have, you know, oh, I'm just going to have a glass of wine. You're not allowed, because you know that that's going to affect the goals. You're not allowed to execute a 3 mini position because that's going to affect the goal of you getting payouts. See the parallels? Once you start seeing life in that way, and trading versus real life, things that just have to be done and are non-negotiables, like a daily risk limit, you know, the budget you can play with in a day. How many trades per day are you even allowed to have? That's also a budget thing. You know, are you allowed 3, which is my personal favorite, on 2R multiples? Or are you allowed 20 if you're more scalpery? But you're definitely not allowed 100, 200, 300. So use the risk settings. They now have maximum trades per day, maximum trades per week. I like the per day one. So I will, once I run up balances in XFAs, I use, typically I will not always use a personal daily loss limit, but I will absolutely use maximum trades per day. And because once I get to a certain balance, I start to scale in and out, the platform counts every one, I will put that to 13, which ballpark gives me about 13, so about 5 or 6 trades on the day. And then if I start to notice that I'm not respecting some of my limits, I will absolutely put the personal daily loss limit, and I will probably stick to about 4.5K rather than like 1,000, 1,000. Like it depends what you're trying to do. But with silver now, you need expansions on those. However, the beginning of an XFA, you absolutely cannot start just going like, oh yeah, I'll go do 3 silvers. Okay, great. JD Nichols says, I work my legs, like doing dips and stuff, especially when the dog needs to go outside. Yeah, dips are good. Anything for... sadly, the stepper is more cardio, I'm afraid. So you get some actual weights. Yeah. JD Nichols says, hit sucked in my mid-30s. Same, man. Absolutely despise high-intensity workouts. Oh my, at 45, it's my birthday. Yeah, happy birthday. I was 45 in December last year. Yeah. Do you believe in Dakotas? Do you believe in love? Do you believe in Dakota's 3-bar reversals? It's nothing to believe in. It's just price action reading, man. Like if you have a level of interest, let's say 115 in silver, we get to 115, they have trouble breaking and they reverse from it. Whether you call it a 3-bar reversal, bearish engulfing, morning star, evening star, whatever kind of stoppage or price, slight failure to advance and then a rollover, it's just price action. It means the seller's won, the dealer's hedged. So there's nothing to believe in. It's just market generated information. Now the second thing is it going to sustain? Is the bigger question. How much legs does that 3-bar reversal have? That's a whole different ballgame and very much a matter of context. So yeah, I do think it's a very simple way to fish for reactions. But if you're looking at 3-bar reversals as an isolated thing, yeah, that's not going to work because that just generally doesn't work. You can't just look at, for example, right here, right now, we have nothing. I have nothing. We have literally no reference levels. So if we now get a 3-bar reversal on a 5-minute chart, that means F all, quite frankly, and it's not a valid signal. But pair it up with a level of interest. So if you're like Dakota, you will look at support and resistances. I look at GEX levels. We all have our own way of doing things. But once you hit the level, whatever it is it a 3-bar reversal? Does the 3rd bar have a big buying wick against the reversal? Or are we just cleanly dropping away from it? So I go deeper. I actually went to define about 7 different reversal patterns that are high probability. And they each have rules around it. So do I believe in price action reading? Yeah. Do I believe in price action reading without context at random areas and expect that that's going to work just because you see a 3-bar reversal? Heck no. Does that answer your question? What is the COMEX range in Central Time? You mean COMEX time of day? That's 7:20. And then the close, so 7:20 a.m. is when it officially starts. But we look at 7:30 because no platform, or very few platforms, will allow you to actually start the calculation at 20 past. Metals are a bit weird, right? LME starts at 14 minutes past. COMEX starts at 20 minutes past. It's like, what's wrong with you people? It's like, why isn't the top of the hour and bottom of the hour enough for you? Why do you have to be different? But yeah, so the close for COMEX in Central Time is 1:30 p.m. Central. So that's the close. However, I like to extend the values past that to cover the entirety of the electronic trading because on most days now, we still move. So I want the value area from that entirety of the afternoon session for me. But yeah, so those are your times. Justin, what do you usually trade the most daily? I prefer micro Nasdaq. That will change depending on where my interest lies. Like, for example, I will stick to metals and energies most days. DAX in the mornings if I'm not doing these streams, or after the stream I will look at DAX. And in fact, these streams were supposed to be DAX. It's just that we never got Eurex products, and now we're stuck staring in metals out of hours. But yeah, so I will trade whatever is moving within my lane. It used to be crude oil and gold for like 10 years solid, with bits of silver peppered in, and bits of natural gas peppered in as well. But then after COVID and 2 years ago, crude oil dried up, changed, had a personality transplant, and is now probably one of the dullest products around. So me and crude oil have officially divorced. The assets have been split. And yeah, but RBOB and heating oil are still on my cards. Natural gas has been on my bingo card for the last week or so. So I'm looking for further upside move, maybe with a bit of a smash towards 350. Depends on how we play around this cold wall. But natural gas still seasonally a very good product to trade. Pretty smooth. Once it decides on direction, it goes a little bit nuts. So, you know, we had a day of like 1,000 tick movement the other day, but that's not normal. Usually you can expect about 250, very, very normal. And then when copper is in some kind of a trending mood and stuff, I trade a lot of copper. So I kind of stick to the same, I would say about 8 or 9 products, but I won't look at all of them at the same time. I'm not going to be like, what am I going to trade now? Is it going to be silver? It's going to be gold? It's going to be too much focus dilution, right? So I will look at, on Sundays, usually when I'm preparing the levels for the week, I will figure out which one of the products are looking the best for that particular week. And then I will make my mind up which two to focus on the day. And then the next day, once the day is done, I'm like, okay, how did that go? I just do like a quick review. It's not nearly as detailed these days. It used to be a lot more detailed. Nowadays, it's more like, did I mess that up? Did I read that? And why? Could I see the auction fade happening? Did I miss some clues? Did I try a short on a multiple single print state? Like things like that. I just kind of do a quick check with myself. Did I follow the times of day, or did I start slipping into some of the bad habits of not following the time of day is a level concept? That's actually a pretty big one for me, and leads to me slipping from my A game to B game to C game very quickly. Another one that I discovered just recently, trying to trade the 50Ks in silver, I was trying to trail stops, and what was happening is that the trade would work, but the trailing stop would take me out of the market at like 1 hour and then continue to run to 3 hour target. So that became a bit of a trigger for me. So I was like, I need to like deal with this because that is not good. So now I have another thing in my mental and tactical game sheet where trading stops is my trigger, especially when most times my plan is perfectly fine. So I need to stay away from that and go back to my 150Ks, wider stops, more risk, but again, appropriate to whatever silver is doing right now. And yeah, so what do I trade daily? I don't know, just varies. But metals and energies, mostly, that's my jam. That's my lane. I stay in my lane. Do you think ES is easier on your fighter flag than NQ? Oh, 100%. Yeah. It's much slower, but some people find it too slow. So YM tends to be the middle ground between the two. I know Jack doesn't like it, but I think it's a pretty decent product. Send him, after 2.5 years of trading, I made my first payout on props, 25% growth over 16 days. Thank you, TopstepTV. Thank you, D, for making it possible. Well done, man. That's an amazing, amazing piece of news. That's why we do this. I love seeing that. And 2.5 years, that's actually still very early on in your career, and you're already starting to get payouts. That is absolutely smashing. So congratulations. Love seeing that. Absolutely, absolutely stunning. This is what props do. they enable you to not risk your own capital to the same degree, even though obviously I'd still pay for combines and stuff. But if you, like for example, if you made all the mistakes that you made in combines on your own private funds, that would be very, very cost prohibitive. Yeah. Short trading. Tilt day is worse than hit day. I need to recover tilt for days. Yeah, I would agree with that statement. What times do I take for value area? 8:20 to 4 p.m. Yes, if we're talking Eastern for metals, that will be it. Alright, so we've come to the end of the stream. Again, very quiet session. So we'll see what this natural gas wants to do. If we hold the call wall all the way into post NY cut, which is post 9 a.m. Central, post 10 p.m. Central, maybe there's a long there. If we don't hold the call wall at 370, then I'm looking to do something similar. So still longs at 350. Will not be shorting this because we have not had London move going higher. The only time I short energies pre-market NYMEX is when we've had a really, really decent move to the upside, and they have somewhat of a short bias ahead of the market open. But that's not happened yet. So it's kind of wedged in between GEX 2 and 3. Sorry, call wall and GEX 2. Need to wait for the resolution of this. And right now it's like 50-50. I have no reference point on that gas, but I do have levels. So we'll see how they want to play it. I'm not on the daytime show today, but I will be on tomorrow. So this is all you're going to get from me today. I'm going to go sleep. Well, dog walk and sleep. Because I'm running on 2 hours sleep and I'm absolutely knackered, to be perfectly honest. Thank you for joining me. This was fun. We learned a lot of stuff. Didn't find a trade, but hey ho, this is London hours for you. Let's do this all over again tomorrow. I am Marcus Ducati. This was the Euro Trade on Topstep TV. That rhymes. I will see you later. Take care.